Be honest with yourself. Is what you're looking at on your charts different to the next retail trader? Probably not. Now, in something as competitive as day trading, this is a big problem. Day trading is dominated by institutional firms, and they're not looking at the same things retail traders are. They have better equipment, and that means you've already lost before you've begun. Institutions have the best equipment because they realize trading is like Formula One. Talent alone isn't enough. You need a combination of both talent and the best equipment to succeed in this field. The key to success in day trading is being different. So how do you do that? Well, in this video, I'm going to show you how easy it is for you to be different and look at the market with the best equipment and avoid being left behind. Let's go. Okay, so we're in the live market, and I am going to show you a trade I took in real time in the live market. You'll see that in front of you in just a moment. However, before we do that, let's pause, catch our breath a little bit. Market is moving a lot. There's a lot going on, with the UK political uncertainty, with the Prime Minister just resigning. Big news, obviously, that's driving the market. And then obviously a lot of stuff coming out of the US and Europe as well, with obviously interest rates and inflation, which is really affecting everyone, although the US central bank is really leading the way in terms of raising rates. UK, we've obviously got the political uncertainty. And then Europe, which is spilling over everywhere. We've got the obviously the Russia-Ukraine war dragging out. But I'm actually not going to talk about any of this stuff, all right, today. And in other videos, which you can check out, I go into a lot of detail about how I bring this into my trading. But we're here to talk about equipment, all right? So I don't want to get distracted by all of this other analysis that institutions obviously are doing, and you can do them too fairly easily. But if you don't have the right equipment, which you see here, then what is the point of doing all of this stuff, right? You're doomed anyway. So I talked about it before, like Formula One. If you follow Formula One, it's an amazing sport, very similar to trading, right at the sort of pinnacle of sport, bringing man and machine together. And ultimately that is what trading is. You need to have talent, and most of you watching this have it, right? If not all of you, you have it, you have it, but you're unable to transform that into trading results. And that's because trading, like Formula One, you do require the correct equipment, okay? So if what you're looking at right now isn't at least some different form of what I have here, if you watch Formula One, right, where you've got the grid like this, and then at the front you've got who? Red Bull, Mercedes, Ferrari, the guys using the best equipment. If you're not using something similar to what you see here, you are at the back of the grid, all right? You're not going to win, basically. So that's something to think about seriously, right? As intelligent as you are and as well or capable you are of reading the market, if you don't have the equipment, right, you're just going to be at the back of the grid. Now, what I'm going to do is I'm going to press play. And one thing I want you to note is that all of these things are all showing you the same thing, really. So, we talked about having the best equipment. Now, it doesn't really matter which sort of form of, I guess, order flow. I was trying to avoid using the word order flow as long as possible. I wanted to ease you into it, but it doesn't really matter which form of order flow you're looking at. Now, a lot of the times in videos I've focused on the depth of market. It's really just buyers versus sellers, and I will get into more detail about what all these columns mean in other videos, but ultimately it is just telling us the kind of balance of buyers and sellers, the ratio. All right, and we can see that depicted across here, across here, across here. It doesn't really matter. What I want to do is just give you a quick flavor of how easy it is for you to read this. All right, so to do that, I'm actually going to come over here and focus today on the footprint. All right, and I'm going to show you why. So you can see me just entered. I just took a position there long on my live account. You can also see it there. So you can see all over the place, you're seeing the same information just in different format. All right, so there'll be information here that kind of tells me the same thing here, 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 here. Doesn't really matter which form you prefer. Obviously, each one will give you slightly different granularity and detail, but ultimately all the roads are leading to the same thing. It's ultimately giving me a map of a ratio of buyers versus sellers. All right, so this is my equipment. Okay, now I have the right equipment. I can now use my talent, or whatever you want to call it, ability to read that equipment. Like I said, it's like Formula One. Two things have to come together. So I'm going to keep it brief, but I want to show you how easy it is for you to do this and for you to bring those two things together. So I'm just going to take it back to before I actually entered the trade. All right, so there's various ways of doing this. You can obviously look on something like the depth of market to see. So again, I don't want to necessarily get into kind of areas of interest and, you know, fundamentals and all the things that you might plan ahead of your trade, to just kind of highlight this problem I see all the time of people not kind of really understanding or acknowledging how important equipment is. I want to really just focus on the equipment for a moment. So what I'm doing, right, let's just say you've got an area where you want to trade in and it's down here, you know, and you want to kind of time it. So just figure out, am I going to go up? Am I going to go down? Should I enter my longs a little bit later? Should I enter down here? And so on and so forth. What I'm doing is I'm looking for a change in behavior, right? Or more than a change in behavior, I'm looking for shorts. If I'm going long, I'm looking for shorts to really get themselves into problems. Why? Because if shorts are getting into problems, they're going to have to get out of their positions, right? To get out of their positions, they're going to have to buy the market. I need to identify that. Again, can you see? Equipment. I cannot identify that. How do you identify that without having the right equipment? It doesn't matter how smart you are. I've seen people in institutional trading, they're not that smart, but they've got the right equipment. So they're going to do much better than someone who's 10 times smarter than them, because they're able to identify this. So how do we start to do that? Well, let's look for irregular patterns in selling behavior. So as we've come down, this is literally the difference, called the delta, between buyers and sellers. All right. So you can see it's really simple stuff. You know, even if you're quite new to markets, you know what a buyer is someone who purchases, obviously, an asset. A seller is someone who sells an asset. The difference is obviously going to tell you which side is stronger or weaker, right? Basic stuff applies to any business. So right now we can see that difference is 157 contracts. We pop down to the next price, the difference is 173 contracts. Can you see? Very similar, right? Now, as we start to move down, we do see quite a big difference here. We're starting to get into territory where obviously the sellers are potentially, we don't know, starting to get overstretched. So we're starting to see quite a big difference here where sellers are really getting quite strong, and then in this area as well. And I want to see a real concentration of that. So let's hit play. Okay. Now, one final thing I forgot to mention. So you're going to see a lot of selling here, right? The other thing we want to see is a lack of movement, because that's what's going to make. So you saw 277 there. You can pause the video if you want. You see this is also now starting to build up. 503, 528, 561. But the market's not moving down. And this is exactly what I want to see. So here, yep, we had selling and the market moved down. Here, we've now got, again, big selling. So on the footprint, it's a little bit easier to see than here, because we keep seeing the selling around this area here. But obviously, because it refreshes itself, it's not keeping the data. Here, we've now popped above 600 now, minus 600 on the delta. So this is very interesting, because can you see we're not moving? Now, why is this important? So firstly, we are seeing what I wanted to see, which is the change in behavior, right? As we were coming down, the selling was, you know, it was okay, 157, which is typical on a market like the S&P that we're looking at here. Obviously, for your market, doesn't matter what market you're looking at, you need to get kind of familiar with what is normal. Then we start to see a lot more happening. The market moves down. We then start to see this big concentration. Now, if you're a seller and you're selling a big amount like that and the market doesn't move down, you're obviously going to start getting a little bit anxious, right? That's what I want to see. Haven't hit the market yet because that selling could eventually win through. So I want to see what happens now. You know, so you see it's a two-step process. It's actually a multiple-step process, but one is this, identifying obviously differences, and then number two is the reaction. Okay, do you see anyone can do this, right? So we're going to do it together. I want to see the reaction. I'm going to hit play again. Let's actually see what happens. Do these sellers start getting nervous? Because you see we're sticking around this point. That's why I do these videos, because I want you to see for yourself. Now, can you see the buyers came through here? Part of that was buyers, but also, let's be realistic, a lot of it is going to be these people who are short, exiting because the market's moving against them. It's not only the market moving against them, but it's also the amount of time. You see, it's almost like looking at things in 3 or 4 dimensions. It's the amount of time it took for nothing to happen, right? So obviously people are going to get nervous. So you now really see a lot of interest from institutional players in this area, partly because they're already interested in this area, but also because they're seeing this interaction. They've identified it using the equipment, right? So I think it's pretty obvious now, the point I'm making, and hopefully it's very clear to you, even to those of you that might be new to trading or have never seen this type of, or maybe you're not new to trading and you've been doing it for years, but you've never seen this type of analysis before. You can see why you're doing yourself a disservice by not looking at this information, because it's available to you. All right, so we now see these sellers probably exited and new buyers came in, right? So this gives us a real benchmark here to really reference from. We can now see, how does the market react as we come in here? You know, do we pop down below and go back above? Do we go down? This is all going to give us information. All right, so what we're actually seeing is the market is kind of now hesitant to go and trade back in this area. All right, so that's why I've started building my position on my live account here, which you can also see here. So you'll see the P&L. Don't get distracted by that. It doesn't really matter. Obviously, everyone's going to be trading in different size. We then see buying coming in here, okay, which is giving me more confidence, right? You can see that quite clearly. Plus 500 on the delta. There's not only the amount of buying or selling coming in, it's what area is it happening in, and when is it happening? You know, is it happening after we've seen this type of behavior? So what I want to do is I'm just going to fast forward it slightly. In fact, let's stick to this area just for one moment, because I want to show you how aggressive the buying really becomes when it dawns on people, especially some of these shorts and obviously new players coming to the market, that there's going to be some change happening now. So you can really see a change in behavior in terms of, you know, how aggressive and confident the sellers were. You can really start seeing buyers now getting confident. That's why I'm adding to my position, all right? So you can really see that, the buying coming through, which it does right now. I believe it does. You'll have to forgive me. I can't remember exactly how it played out. Yeah, there you go. Just really starting to see the buyers get quite aggressive now. So I'm going to fast forward it ever so slightly, because it does take a little while to play out. Do you see that? Very, very aggressive. And can you see that I took my final position long there? Because again, I'm reacting to the equipment, right? I'm seeing buyers coming in. I've got the evidence, right? If you don't have the equipment, how are you going to have the evidence to make a decision? I'm making logical decisions based on new information coming in. I've now pretty much got my max size on, and I'm now going to let it play out. Let's just fast forward it slightly. Okay. And just one thing to note, right, is, and we're almost done. See this here, where we did see a lot of buying come in. Look how much selling there was. 0. Okay, we've got a lot of buying coming in now, which suggests it's kind of the green light that all the analysis we've done and the hard work, kind of that tick in the box we needed, that other people are definitely now seeing what we are seeing. That's not always going to happen. Obviously, you might fall away, in which case you need to take that into consideration in terms of your risk management. But this in itself is risk management as well. It's giving me the confidence to know that, yep, I've got my reference point down here. If you remember, the minus just over 600, 695. If we come down there, obviously I will look to see what sort of reaction we have there, but it's giving me the confidence that at least as far as we're above there and we're getting strong, I should be holding the trade, right? That's part of risk management. Holding, not holding, exiting, not exiting, right? So I'm pretty much just targeting, because I've got quite a low amount of risk here and I've got a clear sort of area that I know I probably won't be interested in the trade if we go below. Seems like a decent attempt to target this sort of area. Seems a very sensible kind of target. I'm targeting that sort of area, so I'm going to just fast forward it here. You can see that the market does mess about a little bit, and then it just had that one attempt to come back down there, but didn't really get anywhere, because obviously most people were looking at this area as a kind of, thought you could call it a support area, where it was likely that, you know, if I just to explain this in a little more detail. So if you think about why these areas like this are important, it's because, think about it, if you're a seller here, right, and the market, and you basically blew out your position, which we can see here, a lot of these guys obviously blowing out these positions, when the market comes back there, you're not really going to have the most amount of enthusiasm to sell the market, are you? Because you've just been hurt, right? It's unlikely you're going to have enthusiasm to sell the market. So what's actually going to happen is you might change your mind, right? You do that. We do that all the time. Where you sell the market and then you get stopped out and it goes the other way and it comes back, it pulls back. What do you think? Think, oh, maybe I was wrong. I'm going to go the other way, right? So a lot of these guys will now be buyers. That's why when it comes back, you're naturally going to get this sort of order flow or volume coming in from that type of thinking, right? Combined with people who want to also get long, who were waiting for this to happen. You can see there's a lot of now buying interest happening. And that is why the move was so strong, okay? And pretty much took off majority of my profits there, and then the last one, again, just kept the stop pretty tight. All right, so you can see there, that was plus 2375, fairly quick. Took about 20 minutes. That's why I did fast forward it, because obviously I didn't want you to sit here for 20 minutes watching that. But that was all possible because I had the right, I could spell it properly, equipment. So hopefully you saw how you can easily access the best equipment, but more importantly, actually make sense of it. Now that was just the tip of the iceberg. To learn more, watch this video here where I break down more live trades and show you how institutions use the right equipment